Ryan Kelly, one stock you like at the Hennessy Large Cap Financial Fund is BB&T. This is a southeastern bank. The stock's down around 7% year to date, but it keeps getting bigger through acquisitions. Is that the way it's going to be?
Yes, BB&T is one of those companies that have grown over the years through acquisitions. Prior to the financial crisis, they rolled up many smaller banks over many years. In the past year, they've announced and completed 3 whole bank acquisitions. The most recent one was completed in July of this year with Susquehanna Bank Shares. It's given them more of a presence as you head further north up into the Mid-Atlantic. And we think that this is a good strategy overall. The company is trading at an attractive valuation at only about 10.5 times next year's earnings. And it's one of our largest positions in the fund.
And you're also a fan of Regions Financial. This stock's down around 14–15% so far this year. A lot of worries about its energy exposure.
Yes, Regions Financial, it's one of the underperforming funds in the space. The large cap banks in general are down about 5% for the year. But what's been holding this stock back has been worries around its energy exposure. We took a close look at this and think that it's overblown at this point in time. There's about $1 billion in loans to the oil field services sector, which is only about 1% of their total loan portfolio. So we think that, again, trading at about 10.5, 11 times next year earnings, that this will be a good stock to own.
Now, you also run the Hennessy Small Cap Financial Fund, and in that one, you like Bank United. This stock's having a great year. It's up over 25%, and they're actually trying to get into the New York market. They're based in Florida, but they're trying to move up here.
Yes, Bank United is one of our favorite names. It's one of the largest holdings in our small cap financial fund. This is a situation where about 4 years ago, they brought on a new chairman, president, and CEO, John Canis. He was at North Fork Bank for about 3 decades, grew that very well in the New York market, and eventually sold it to Capital One. So he knows the New York market very well. He knows the commercial real estate market. And so this has really allowed Bank United to grow just very well in the last few years. In the last year alone, they grew assets about 26%. Loans are up 37% and deposits are up 27%. So this is really outsized growth rate. And they've been able to do this and still keep their costs somewhat down, given that they are in a branch expansion strategy.
All right, and the last name you want to highlight is WSFS. It's having a good year. It's up around, it's like 14% or so. It's a Mid-Atlantic bank. What's so special about it?
Well, this company is in Wilmington, Delaware. They have branches throughout Philadelphia, Wilmington, and down into the southern part of Delaware. It's a good bank. It's got good asset quality, a strong balance sheet, but they also have been buying companies as well. They've done 2 small acquisitions in the last year. Pretty small. They added about 20% total to their assets. And the most recent one actually closed in just a couple weeks ago after the end of the 3rd quarter. So this is a company that we continue to like. We've known the management team for many years and think that it's a pretty good value here.
All right, well, thanks a lot, Ryan.
Thank you, Greg.
Thank you for watching The Street.